Sir, I bought this put option, market going. So when the market will come down, right? I used to tell for fun, even my wife don't listen to me. Now, how do you think the market will listen to me? How can I tell when the market will be coming down, right? That nobody knows. So the fact is that when the market participants think that now there may be problem, but 6 months, 1 year, 2 year down the line, the problems are not going to be there. So our economy is going to do well. That means the stock market will go higher. So they will come and buy even when the present conditions are not good. So always remember, stock market works differently. If stock market has to work with some logic, then people have studied in IIT, IIM, Harvard University, Stanford University, they must be making good money. But you know how many of those people fail in the markets? That is because markets work with a different set of logics. And you need to understand that if you really want to make money. Now, let me start from the beginning for the people who do not know anything. The stock market works in cycles. There are 3 cycles. One is called bull cycle. Second one is called bear cycle. The third one is called bunny cycle. A bull cycle means market going higher. Markets are moving higher. And bear cycle means market falling. And the bunny cycle means market is neither going up nor coming down. Sometimes it go up, then come down, go up and come down. And finally market, they don't go anywhere. So stock market, in the longer term perspective, there are 3 phases: bull cycle, bear cycle and bunny cycle. Now, I'm going to show you the Sensex chart. Okay. Here, I think there is some software problem. I am not able to share my screen. If you don't mind, just 1 minute, let me see whether I can get it right. Yeah, I tried, but it's not working. எத்தனை பேர் இருக்கிறாங்க தெரியுமா ஃபேஸ்புக்கில்? வரலையே இங்கே. Yeah. Hello. Can you hear me?
Yes, sir. Very much, sir. Very much, sir.
Yeah. Sorry, there is some problem. I'm not able to share my desktop. So when I click on the share desktop, so it is getting hanged. Okay. So nothing to worry. So I'll just explain. And if you look at the Sensex chart, and from around 1998 to somewhere around 2003, the Sensex did not go up, did not come down. It was trading almost in the same range, right? And I can see the picture, so I don't know, I cannot share it. So from 1997 to 2003, and it was almost in the same place. That was nearly 5 years. So for 5 years, market did not move at all. But then came the next bull phase, the largest bull run in Indian stock market history between 2003 to 2007. 2003 to 2007, it was only 5 years, 60 months. In these 5 years, Sensex shot up from 3,000 to 21,000. That is almost 700%. 700% in 60 months. What is the average? It's more than 10% per month. So that was the fantastic bull run. And then came the beginning of 2008, January, what the people call it as Lehman Brothers collapse or Great Recession. So the markets crashed. The Sensex fell about 50%. So here are the three phases. From 97 to 2003, it was a bunny market. 2003 to 2007, bull market. And 2008 to 2009, it was a bear market. So there are three cycles. And now, just before this session, so my friend, Mr. T.G. Sendilvelan, and he was talking about the performance of the Sensex. And he said, Public Provident Fund has given 9% return. Sensex has given 14% return. And he has given other comparisons like gold and other asset classes. But let me give you my view. 1986 to 1995, and that was the period, like a child, my child was 1 foot tall. Then after a few years, the child has grown from 1 feet tall to 6 feet tall. Let us say in about 20 years. Do you think in the next 20 years, my son will grow from 6 feet tall to 36 feet tall? No. So sometimes a certain phase of the economy tends to do well. So then, what has happened between 1980 to 1995, there was not much of a market participants. There was no internet, there was no email, there was no online, right? So therefore, we cannot take that into consideration. And that was the period. I still remember in 1978, my father had gone to Gulf countries to work. And I still remember he went in 1978. When he went in 1978, $1 was about 6 rupees. Because he used to send the dollars. He came back in 1986. It was only 8 years. In 86, when he came, $1 was 16 rupees. So ultra high inflation and rupee depreciating 300% in 8 years. So naturally, in ultra high inflation times, the equity markets tend to do well. So if we remove that period, so if we take from 1995 or 2000, and then if we take last 20, 25 years, the Sensex has not given a better return than the public provident fund return. As Mr. Sendil Velan said, if you take 1986 as the base year, yes, it has given. But if you take 1995 or 2000, the Sensex has not given a better return than the public provident fund return. And remember, the Sensex consists of top 30 companies in India. If any company is not doing well for one or the other reason, that company will be thrown out mercilessly. And another best performing company will be brought into the Sensex. So that means the Sensex is always having 30 winning horses. But despite that, in the longer period of time, say 20 to 25 years time, the Sensex has not given a better return than the fixed instrument, public provident fund. So, I'm not trying to discourage you people, don't come and invest in stock market, go for debt instruments. I'm not coming to that. What I'm trying to tell you, if you know the market cycles, you will be better off and you can make more money. Say, for example, if I take 1995 to 2020, 1995 to 2020, the Sensex has not given better return than the public provident fund. But what happened between 2003 to 2007? Public provident fund has given one-time return. Sensex has given 7 times return. Sensex outperformed public provident fund by 7 times, 700%. So, if you know the cycle and you can make money. So that is what I'm trying to tell you. But then, how to know the cycles? Nobody can predict the exact bottoming out of the market or exact topping out of the market. People just say for fun. Who can predict the market exactly? Only the liars and the God. And people cannot predict. But however, looking at the macroeconomic pictures, we will be able to judge the market trend roughly. And in fact, that is what I did last year. Last year, I was so confidently told that markets will hit all-time high. And that was the time market hit a low, then recovered. Whether the market will be breaking the low of coronavirus, that is March 2020 low, or market will hit all-time high. I said market will hit all-time high first. So why? Macroeconomic fundamentals. So if you can look at it, you will be able to judge the market direction. Now, I said there are 3 cycles: bull cycle, bear cycle, consolidation cycle, bunny cycle. So one bull, then followed by bear, then followed by bunny. Then logically, what should be the next one? Logically, the next one should be the bull one. And I can tell you, the best opportunity in your life comes in the worst crisis. The best opportunity comes during the worst crisis in your life. And if you know how to capture. In 1929, the US markets fell 90%. US markets fell 90% in 1929. And that is called Great Depression. You can just go on Google, you will know the Great Depression, 1929, US markets fell 90%. And it took almost 30 years to recover. Unfortunately, I'm not able to share my screen here. You can go to Google. You can go to Google and search Dow 100-year chart. Dow 100-year chart. And you can find some images and you will find all these things.
Hello.
For 25 years before 1929, the US markets were moving up, down, up, down. It was a bunny market. And then came a very big bull market. And then in 1929 came the crash. Then took about 30 years to recover. Then another bull run came, 20-year consolidation. Then another bull run came. So sometimes these major trends, bull market or bear market or bunny market, can last 20 years, 25 years, 30 years also. And how many of you know that Japan market, the Japanese index is called Nikkei, which is trading around 30,000 now. Japanese index is called Nikkei, which is trading around 30,000 now. Can anybody guess what was the index about 30 years before? I repeat, Japanese index Nikkei is trading around 30,000 now. And 30 years before, what was the index? And it was 40,000. So can you see how long a bear market can last in an economy? 30 years. In fact, the funny thing is that Japanese index crashed in 1989. For the next 10 years, the markets did not go up. Markets crashed in 1989, but for the next 10 years, the markets did not recover. And the Japanese people, they said that they have lost 1 decade. They have lost 1 decade. So that is why they came out with a new word, last decade. It's a very famous word. You just go to Google and type last decade, you will come to know. They coined this word sometimes in 1999 because 10 years the market did not improve. Now, if they were to coin the new word, they must say last quarter century, because for last 25 years it did not go up. So, studying the longer term perspective, market trends, and you must know. And of course, it will be very difficult for you to imagine that kind of a bear market because we are emerging market. So emerging market, so we are growing. So that will not happen in India. But anyway, I'm just letting you know how the market cycles work. So in 1929, when this Great Depression came, that was the worst fall. And then later, another 70, 80 years later, that another fall came in the world markets because of Lehman Brothers collapse. Lehman Brothers is a bank, an investment bank, and they filed for bankruptcy. The markets fell all over the world. They call it as Lehman Brothers collapse. But later, people started calling that fall as Great Recession. Not Lehman Brothers collapse, they use the word Great Recession. why they use the word Great Recession. The last century, it was a Great Depression. This century is the Great Recession. So, Great Recession and Great Depression, they both are considered as once in a century affair. Once in a century affair. That is why they use the word Great Recession. But unfortunately, in this century, two disasters have happened. One is the Lehman Brothers collapse. The second one is coronavirus. But you all know what happened to Indian stock market investors who invested during the Lehman Brothers collapse. They all uniformly made fantastic profit. And I still remember in 2009, in the month of March, there was a stock called JK Cement. That share was trading at 40 rupees. And now it is trading around 2,800 rupees. So where is 40 rupees? Where is 2,800 rupees? And 2009 to 2021, it's about 12, 13 years. But this stock has gone 50, 60 times. And there are many stocks. You can give example like Bajaj Finance, so there are Eicher Motors. So there are many stocks. I'm just giving one example. So always when the market collapse, and that two things like coronavirus and Lehman Brothers, and it gives a very good opportunity for long-term investors. And many people, the problem, there is a proverb in Tamil, Kallai Kandal Naye Kanam, Naye Kandal Kallai Kanam. Let me translate it in English. And they say, when I see the dog, I don't see the stone. When I see the stone, I don't see the dog. What is the actual meaning of this? The people think, if I see the dog, I want to throw stone on the dog. So I search for the stone, I'm not getting any stone. Whenever I get plenty of stones, I have the urge to throw on some dog, but I don't see the dog. This is the literal meaning. But actually, the philosophical meaning is different. So let us not go into that. So when the biggest problem with the investors, when the market crashes, they don't have the money because they would have already invested at higher level. They'll be sitting with a loss. They don't have extra money to invest. And when they have the money, the markets are not at a lower level. The markets are at high level. So that is why, although I'm giving a macro pictures and long-term view, but don't go and put all the money at one go. Either you can go for systematic investment plan, or you keep some money in debt instruments. So as and when you see the opportunity, dispose some of the debt instruments and put the money in equity. So that we will come little later. So what I'm trying to tell you, the markets all over the world uniformly went up after a big crisis. Lehman Brothers crisis also taught us the same thing. And after the Lehman Brothers collapse, I think the Sensex has come down to 9,500. From 9,500, now it has come all the way to 50,000 plus. Even during the coronavirus period, wave 1, a Sensex has come to about 20,000. And now it is about 50,000. So always remember, the crisis is an opportunity for investors. Now, you may ask one question. Sir, all these gyans you should have given me 1 year before, sir, when the Sensex was 20,000, 25,000. Now the Sensex is already 50,000 plus. It is already near all-time high. Sir, what is the point of giving all these gyans now? But let me tell you, sometimes this market you may feel all-time high, but all-time high is not always all-time high. All-time high is not always all-time high. And let me explain. Let us say somebody is sitting in US or in Japan, and he has got a lot of money. He put that money in bank FD. He gets almost 0% return. I do have a bank account in Singapore. One time I walked into the branch. So I was just looking, what is the interest rate they are offering for my savings account? So I saw it was written 0.05% per annum. 0.05% per annum. That is the interest offered by Singapore banks. So if you are sitting in Japan or US or developed countries, the interest rate is almost zero. So if somebody is buying a stock for $100, if somebody buying a stock for $100, then it comes to $90, $80. Okay, he lost it. He wait patiently. And after some time, when the price come to $105, he's very happy. Why? Because he's in profit. But same thing if it happens in India, you will not be happy. Why you will not be happy? If you put the money in bank FD or public provident fund, you are likely to get about 6 to 7% return. So if you buy a stock for 100 rupees, let us say for 3 years, the price is down. So you are just wait patiently. After 3 years, if the price come to 105, how can you be happy? You are just making only 5 rupees profit, 5% profit. Had you put the money in bank FD, you would have got 20 rupees. So in the developed economies where the interest rates is almost zero, the all-time high makes sense. But in a market like India, all-time high does not make sense. Let me tell you, if you calculate the CAGR, compounded annual growth rate of Sensex, assume that somebody invested at the peak of 2007. Sensex was 21,000. Now it is about 50,000. It's almost done. And in how many years? 13 years? What is the big deal about money is doubling or becoming like 130% or 140 or even 150% in 12, 13 years? Even your bank FD would have given that return. So don't be misled by the people who always say market at all-time high, market is overvalued, right? And I can tell you, at least, we are far better people. Imagine about the FIAs. FIAs came to India in 2008 and they brought $1. $1 was 40 rupees. And they've invested here. After 13 years, that 40 rupees has become 100 rupees. Because the Sensex has gone from 20,000 to 50,000. Right? 100 rupees. Now, if they want to take back that 100 rupees, they are not going to get $2.5 because now $1 is 75. They are going to get $1.3. So which means in 12, 13 years, they got only 30%. That means they got, in dollar term, they've got only 2% return only. So therefore, I always tell you one thing, corrections are two types. One is a price correction, the other one is a time correction. So I can say that our markets from 2008 to 2021, it is actually consolidation only. Although Sensex has gone from 20,000 to 50,000, but I will still say this is a consolidation phase. That is because if you take the opportunity cost into account, and we are nowhere near the bubble territory. And you must have seen 2003 to 2007 bull run, you must have seen. And you know, all kinds of jokes. And one guy say, I went to Bombay Stock Exchange and I misplaced my wallet. In the evening when I go and see the wallet, there was 100 rupees extra money in the wallet. You just name BSE, you get more money. And stocks, there are many stocks have shot up 50 times, 100 times. I think Unitech, in one particular year, it has shot up 30 times, 40 times. There were so many stocks which have shot up 100 times. I don't think that in the last 10 years, you have seen any such crazy moves. And right now, our market participants are, in my opinion, I may be wrong, but right now the market participants are matured people. Even the market is matured and there are no very hyper bubble or anything like that. So therefore, there is always room for further market move. And what are the reasons? That is what I'm going to tell you now. Now, in next phase, and I already told you, the next phase is going to be a bull phase. And that is because we have seen the bull, we have seen the bear, we have seen the consolidation. And let me make you one statement. It can be, to some of you, it may be looking very shocking. But what statement I made last year was also very, very shocking statement for many people. Okay. Sensex is trading around 50,000 now. I can tell you, I'm expecting Sensex to touch 1 lakh in 3 years' time. And I'm expecting Sensex to touch 3 lakh in 10 years' time. A very important disclaimer, I'm not a SEBI registered research analyst, and I'm just sharing my views, and I have right to be wrong. That's my very famous disclaimer. I have a right to be wrong, but most of the time I've been right. So I'm expecting Sensex to touch 1 lakh in 3 years, Sensex to touch 3 lakh in 10 years. Okay. To the people who think that this is a shocking statement, let me tell you, 2003 Sensex was 3,000, 2007 Sensex was 21,000. It was a 7x return, 7 times return. When Sensex can go 7 times between 2003 to 2007, why it cannot go from 50,000 to 3 lakh between 2021 and 2031? Is very much possible, right? So that is one thing. Now, I'm going to throw you some light why I am bullish for long term. Let me give you one by one. The first is a technical analysis. And technically, the markets see a bull phase, and second is a bear phase. The third one is a consolidation phase. That is a one cycle. Then after that, the second cycle starts. The second cycle, the bull. And how powerful will that bull? That depends on how long was the consolidation. The longer the consolidation, the following bull run will be more powerful. And in fact, I can say between 2008 to 2021, taking the opportunity cost into account, this is the longest bunny run in our market. Our markets have consolidated for 12, 13 years. So I will not be surprised if the next phase, the bull run is also very good. So that is technical aspect. Now coming to the fundamental aspect. The first thing I'm going to discuss is GST, Goods and Services Tax. Many countries have introduced goods and services tax. And it is a general observation that first 2 years of GST implementation, there are some problems. Some countries, after introducing the GST, the problem came, they could not digest the problem and they've given up on GST. It happened in some countries. I don't want to name the country. But the countries who sustained that difficult period, they've seen the fruit of the efforts after 2 years. It takes time. We call this as a right curve. You know what is right curve? They put right. Okay. So when they put right like this, so when your school teacher put right or wrong, in the right, it goes down a little bit and then only it shoots up. It never shoots up directly. So anything major changes you bring to economy, so there will be some dip first, then after that only it will shoot up. So we have introduced GST in 2017, right? And 2-3 years is the initial teething problem. But by the time that teething problem is over, the coronavirus came. But now we are seeing the fruits of the effort put in GST. 6 months before, I remember Government of India was declaring less than 1 lakh crore as the GST collection. I think the last month means that is for the previous month. The GST numbers are declared 1 month late. And the Government of India declared 1.41 lakh crore of GST collection, which is about 40% higher than the previous figures, about 6 months, 7 months before figure. Just imagine if the central government gets about 40% extra money, they don't have to ask you for more tax through some other means. I'm not a political person. I'm just only a stock market person. Some people may ask, sir, still petrol prices keep going higher, right? And the point here is that when economy does well, and when the full impact of the GST, when it starts coming into the kitty, and sky is the limit. And I will not be surprised if the GST collection goes beyond 1.5 lakh crore, anywhere from 1.5 lakh crore to 2 lakh crore, as and when this coronavirus problem is over, when the economy is in full swing. for any country stock market to do well, the most important criteria is a stable government and stable policies, and the government's finances must be happy. If the government is struggling with its finances, and they will tax you more. When you have less money to spend, when you have less money to spend, companies cannot grow, and it has a ripple effect. So the most important criteria for a good bull market is a healthy finances in central government. So this GST is likely to do the trick there. Number two, and I always wonder, India is having the second highest population in the world. And but despite that, we are not a very powerful country. You know, in United Nations, 5 countries have the veto power, but India is not one of them. Forget about veto power. We are even not even getting the 1 seat in the Security Council. And but is it because people are not intelligent? But look at the information technology industry. Our Indians are ruling the world. And you go to US, you know, there are so many US cities look like a South Indian city there. Even the restaurants, you know, name boards are in Tamil and Telugu. So there is no shortage of knowledge in India. Despite that, why we have not been a superpower? And there are only 2 reasons. That's my opinion. I may be wrong. There are 2 major problems that India has got. And just to give you a simple analogy, you work, you get a salary. So that is income. Then you spend money. So income and expenditure. So the remaining money is savings. The more you save, the more you will be happy in your life. The more richer guy, the more recognition in society. Same thing applies to the government also. When it comes to international trade, we do export, so we receive the dollar. That is our income. When we import, we spend the money. So this income minus expenditure is the savings in dollar terms. And more the savings, more powerful. But unfortunately, no matter what we export, whatever money we are receiving, and all that money are going for 2 things. One is crude oil, other one is gold. And we are importing a lot of crude and a lot of gold. So now the crude oil prices are not doing well. If you can remember, in 2007-8, it was $130, $150, but now it is struggling around $60 to $70. The same way, the gold demand is also keep going down. And you know, there are so many other alternatives. Like 20 years before, you want to invest in gold, you have to buy the gold. There is no other way. But now there is a gold bond, there is a gold ETF. So there are so many alternate things have come. So now the demand for gold is going down. So that is one good thing. And second thing, because the time is getting too long, I'll cut short the story. Gulf countries are the countries who are producing a lot of crude oil, and the US government wanted to be self-sufficient, and they spent a lot of money. They developed a technology called fracking technology. So I wanted to talk about fracking technology, but the time is short. So you can go to Google and type fracking technology and you will know the story. And 2 years before, the US has become self-sufficient in crude oil. And in 2019 or 20, US has become the #1 producer of crude oil and overtaking Saudi Arabia. So just imagine, US is not importing and they're in fact exporting. So the demand for the next many years is going to be not very good for crude oil. And not only that, and another 5 to 10 years time, and all the cars and motorbikes or two-wheelers will be run on EV, electric vehicle. And already you know which is the most valued automobile company in the world, that is Tesla, and which is an electric vehicle car. And in India, it is still not popular because electric cars are very expensive. And the only cheaper car available is Tata Nexon, and that is doing very well. So in future, when more and more electric vehicles come, and the future for crude oil will be going down. So we are spending a lot of foreign exchange for crude oil, that may go down. So crude oil will come in our favor, gold will come in our favor, the GST will come in our favor, right? And already the rupee has been a strong performer in the international markets. I remember I went to Singapore to work as a teacher in 1994, January. And in 1994, January, one Singapore dollar was about 20 rupees. And in 2008, in this 14-year period, one Singapore dollar has become 50 rupees. From 20 rupees, it has become 50 rupees, which is 2.5 times depreciation of Indian rupee. But in 2008, it was 50 rupees. Now also it is 50 rupees only. That means in the last 12, 13 years, we have not depreciated even 1 rupee against the Singapore dollar. And look at the US dollar. In 2013, I remember during taper tantrum period, 1 US dollar, Indian rupee was 69 rupees. Now it is 72, 73. It was not even 10%. But if you are in US, you go and put the money in US bank, you are not even getting 1% interest. Here you go and put money in bank FD, you get 6% interest. So there's a difference of 5%. Logically, the Indian rupee should depreciate by 5%. But that has not happened. It has not even depreciated 1% in last 8 years. You remember in the beginning I said, when my father went to Gulf countries, 78 to 86, that 8-year period, rupee depreciated 300%. The last 8 years, it did not even depreciate 8%. So our currency is also stronger. So our currency is strong. GST is going to do the magic. Gold and crude will come in our favor. And so there are many other things I can talk because it is already more than 1 hour. And many of you are losing your patience. And therefore, I just stop here. And there are so many macroeconomic developments happening in the world that is going to be in our favor. And let me tell you, Indian stock market is one of the most expensive stock market in the world. I think right now we should be trading around 30 to 35 PE ratio. Whereas the Chinese markets are trading only at 10 to 11 PE ratio only. So why? Because even the foreign institutional investors know the potential of India. That is why even at such a high valuation, they are coming and investing. right? So, however, just few pieces of advice. So tomorrow, if the Sensex fall 500 point, don't come to my timeline and troll. Sir, you said Sensex will go to 1 lakh, 3 lakh. Why the Sensex is falling 500 point? So what I've given is a longer term perspective, not the shorter term perspective. And second thing, this is not an invitation for you to go and invest in the market tomorrow. So this is a longer term perspective view. There will always be corrections in between. And let me tell you, between 2003 to 2007, Sensex shot up 700% in 5 years. 5 years is 60 months. 60 months, 700%. But during these 5 years, there were 10 times the Sensex fell more than 10%. Corrections, in fact, the corrections will be fast and furious only in bull market, right? So there will always be intermittent corrections here and there. You can use those corrections to buy, or you can go for SIP, or you can put your funds in debt instruments. So as and when you see market at attractive levels, you can just convert them into equity. So I'm not here to give those kind of gyans. These are the standard gyans given by everybody. So there will always be, wherever there are opportunities, there will always be challenges, right? So I hope you have enjoyed the session. So this is my first session where I did not talk about trading, but I'm a very, very short-term trader. And now this is my first session where I talk about long-term outlook for Indian markets. So hope you enjoyed the video. Thank you for watching. So if you have got any questions, you can ask now. I don't know whether I can see here because my screen is getting, I'm not able to see the questions. So I can see some comment, right? Mostly these are the appreciation comments only. Yeah. Shraddha, is it Shraddha?
Yeah.
Okay, because there is some problem, I'm not able to see the questions here. So maybe if you can see the questions, 1 or 2 questions, you can ask on behalf of the viewers.
So my voice is audible?
Not very good, but still audible.
Okay, so I can see a few questions posted for you, sir.
Yeah.
The first question is your outlook on the crude price and related Sensex sections.
The outlook for crude, as I stated very clearly, okay, the long-term outlook is negative. So that's because the US has become #1 producer in the world, and they've become net exporter also. And then this electric vehicles things catching up very fast. So the technology always, will grow exponentially. So even the government of India has a vision by 2030, no vehicle on the road should be run on petrol or diesel. So that is the vision of government of India. So if these things materialize, then where is the demand for crude? And if the crude demand goes down, it is good for us because we are spending a lot of money for crude. A major chunk of our foreign exchange is spent for crude and gold. So even I feel that I will not be surprised even, if India become a superpower one day in another 10 to 20 years. Right. Next question
is related to your views on the pharmaceutical and the chemical sector.
This pharmaceutical, chemical, I can tell you, because for the last 1 year, the specialty are doing extremely well. And ever since this corona pandemic started, pharmaceutical companies are doing well. But these are all like short-term views. When I say short-term view, even 6 months, 1 year is also short-term for me. When I say long-term, my long-term is 5 to 10 years. right? So in the long term, 5 to 10 years, if you are a conservative investor, you can simply go for exchange traded funds. That is the best option. But if you think that you have the analytical skill to analyze some sectors, because I cut short my session because it was time is too long, and I wanted to discuss some sectors, I did not have time, so that's why I cut down. And if you think that you have the analytical power to analyze certain sectors, you can just analyze and do. And another simple thing, let me tell you, there is no point in asking, will pharmaceutical will do well, or will specialty chemicals will do well. I'll ask you one simple question. And do you think Infosys founder Narayana Murthy would have thought Infosys will grow so much? If he had the vision, why did he give the equity? I think he gave the equity for 70 rupees. Why should he give the equity shares for 70 rupees? He could have borrowed loan at any interest rate, right? Because Infosys share has given a CAGR of more than 100%, I think. So he could have got a loan at 50% interest also. But the thing is, what is going to happen next 5 year, 10 year, it's going to be very difficult for you to judge now. Who knows, all of a sudden, one new sector may do very well, right? And the view which I've given for a very long term. So very long term, and all the sectors will be doing well. And maybe one sector may slightly underperform the other sector, right? So otherwise, there is I'm not really an expert to dissect the sectors in a short-term perspective, right? Yeah.
The next question is related to which sector is your favorite, and what is the potential of that sector?
Mr. Vajas, let me tell you, though I have conducted this session, when it comes to investment, I prefer to go for exchange traded funds. When it comes to trading, I'm a high risk taker. When it comes to investment, I'm not a high risk taker, and I usually invest through exchange traded funds. So I'm not a high risk taker. So therefore, there is no favorite sector for me. Right? The time is almost 6:12. So maybe I can take one last question. We can wind up the session.
Sir, one more question is related to the gold theme. Said the gold theme is picking up, but you said that the gold price are near to the peak. What is your view and why it is contradictory?
Okay, my view about the gold. Okay, so maybe because this is the last question, so maybe I explain a little bit more. Usually, the gold and stock markets are inversely correlated. If you can see, as and when there is a very big problem, the problem faced by the entire global markets, that is when the gold prices will shoot up. And I'll give you one example. Sometimes in 1980, there was something called oil crisis, Iran oil crisis. You just go to Google, type, you will know. And that is when the gold prices shot up about 400% to 500%. Then after that, prices fell. For the next 30 years, the prices did not go up. But here it went up because of rupee depreciation. The gold prices moves in India based on three factors. One is the Indian dollar exchange rate. Second one is international gold prices. The third one is the taxation on gold in Indian government, right? So going forward, I told you the Indian currency is not likely to depreciate much. And then, as I told you, the gold prices are inversely correlated to the stock markets. So all over the world, and Lehman Brothers collapse, markets crashed. And that was the time when the gold prices shot up 300, 400%. Then after that, on September 2011, the gold price was $1,900 per ounce in international market. And today also it is $1,900. That means in the last 8 years, the gold prices did not even go up by $1. Right? So going forward, the gold price also, I'm not expecting very bullish, and I'm a bull in Indian rupee also. Indian rupee not likely to depreciate. And the third one, and already there is a 10% of tax by Indian government for gold, so which is not likely to go up, because if that goes up, that will incentivize the smugglers to bring in the gold. And in fact, 2 years before, our finance minister Nirmala Sitharaman increased the gold tax from 10% to 12.5%. And then there were a lot of reports about more gold smuggling. That is why in the last budget or previous budget, I don't remember exactly, she reduced the tax from 12.5% to 10%. So international prices are not going to be very good, and Indian rupee is likely to be stronger, and then taxation is also not going to go higher. So when all the three factors are going against it, I'm not saying that the gold price will not go up. The gold price will go up, but it will not outperform the bank FD or public provident fund. So gold going forward is not a good investment. So my simple advice, okay, if you have got a beautiful wife, if you have got beautiful daughter, you buy any amount of gold to make them more beautiful. But don't invest gold with investment in your mind. So gold is for beauty, not for investment. That is my opinion. Right? So I hope you enjoyed the question and answer session also. So I thank everyone. And now I leave the stage to you, Mr. Wajas.
TG? TG? I think he's facing the audio issue. Many thanks, Mr. For making it convenient to attend this event and joining for this webinar. I would like to thank all the participants for making it convenient to attend this event. And we have got enlightening views of Mr. P.R. Sunder. And will be.
Yes, I'm audible now. Hold on.
Okay. Yeah.
Oh.
Yeah. Continue.
Yeah. See, as a customer, I'm supposed to do the vote of thanks, and we missed the most important person, our chief business officer over here, and who is the most apt person to start any initiative. This initiative is basically taken by him, Sri Samir Patil, the BSc Knowledge Series, and who is the apt and fit person to be here. Who's the veteran of all subjects. You must be seeing the persons whomsoever, one may be good at currency, other may be good at commodity, other may be mutual funds and all. Sri Samir Patel was there. He is a master of currency, commodity, equity, offshore products, onshore products, everything. But for being instrumental, I would like to thank Mr. Samir Patel for this. And then my friend and beloved sir, the big brand in the securities market. You name him more than the company, more than the website. PR Sundar, he himself is a brand, and having a lot of YouTube followers and having few lakhs of Twitter followers, and it is very difficult to get his time. And since PSCB asked for it, and he was able to spare his valuable time. For him, every minute matters. I think this is the right time. If at all he is not here, he must be doing the post-market research report or whatever in YouTube. So he compromised his time, and he has done this with no cost for BSc. So, sir, we thank you. Ton of thanks for you with lots of love, and I don't have words to say, and we'll continue to have your cooperation for teachers. And my dear colleague Ujas and Shraddha, Sharaf and others in the background who worked for the success of the program, I thank my colleagues also. Nevertheless, I would like to thank the investors. In the beginning, you would have seen more than 1,012 in WebEx and plus 2,000 in Facebook who were viewing the our video presentation. thanks investors. I fondly remember all these programs. PR Sundar sir programs were really lovable by many of the investors, and many of the investors use his presentations or views as Bible. So thank all investors. I hope the event would have been great learning to you all. With this, I will thank and close the event. Thanks one and all.
Thank you. Close பண்ணிடலாம்ல?
Yes, sir.